Today is Monday, August 7th, 2023. I am Mark Beavis. Welcome to the show. On the show today, Telus has announced a dramatic plunge in profits, and it's going to be laying off around 6,000 employees. We're going to look at what's happening there. Also, Stats Canada has released its most recent employment report. We're going to look at those numbers. Plus, the first home savings account here in Canada is really gaining traction. The momentum is expected to continue. And I'm going to share two lighthearted stories with you today. Zoom and Tupperware. We're definitely living in interesting times. Let's get started with today's news. For the quarter ending June 30th, Telus has announced an income drop of almost 61% compared with the same period last year. Second quarter profit was $196 million, and that compares to $498 million for the same quarter a year earlier. Now, in response, the company has announced it is going to be laying off 6,000 of its employees, and it cites the need to free up free cash flow to remain competitive in its market. 4,000 positions will be cut from the main Telus business, and an additional 2,000 will be coming from Telus International. The overall plan here includes both voluntary departure packages, and it offers early retirement. It's expected that about 1/3 of the job reductions are going to come from these two programs and just normal attrition. At the end of 2022, Telus had around 108,000 or so employees. So these recent layoffs are going to represent about 5.5% of its total workforce. From a bottom line perspective, it is projected that these restructuring costs will be around $475 million this year, but it will then lead to annual savings of more than $325 going forward. Telus isn't the only company that's struggling in this industry. Rival BCE announced in June that it would be cutting around 1,300 positions, and Rogers Communications advised its staff last month that it would be offering voluntary departure packages as well. Last Friday, in its most recent employment report, Stats Canada announced that the country lost 6,400 jobs in July, resulting in the unemployment rate rising slightly to 5.5%. This is the third straight month of increase in the unemployment rate. Now, that said, with a job market that's still pretty tight, workers' compensation is actually increasing, and wages accelerated to 5%. This is an increase of 3.9% last month. In June, there was a surprise 59,900 jobs created in the economy. The new numbers with this recent decline has some economists wondering whether this is showing an economy that is starting to slow down a little bit. The jobless rate here in Canada has been rising steadily since May. The 3-month moving average is now at 5.37%. Now, nothing is guaranteed, but if we see rates hold at this number or increase a little bit more over the coming months, it could be an early sign of a pending economic downturn. The job losses in this report were led by decreases in construction, public administration, recreation and transportation, and warehousing. While we are back from our almost Canada-wide meet and greets with our friends over at Blossom Social, we visited Calgary, Vancouver, Toronto, and Montreal during this tour. We met almost 1,000 of our Investing Academy students, our YouTube subscribers, and Blossom members, and we truly had a fantastic time. As I mentioned before, we all live in this online world these days, and sitting down and chatting with so many of our community reminds us of why we, in fact, do what we do. We heard so many personal stories, inspiring stories that were shared with us on our one-to-one meets, that it was truly humbling and inspirational for all of us, for the whole team. If you're not on the Blossom app, I'd say give it a try. I will put a link in this video so you can check that out there. If you missed us in one of those cities this year, we are planning a repeat tour in 2024, and we're also hoping to add additional cities to the tour as well. It looks like demand for the new first home savings account has really been strong so far. According to a report by RBC, tens of thousands of accounts have been opened since April, mostly by Canadians under the age of 45. Likewise, a National Bank of Canada representative stated that demand has exceeded their expectations, with most FHSA holders in their 30s. All of the big 6 Canadian banks say that they will have this account open by the end of the year. The FHSA is a tax-free savings account that the federal government first announced in 2022 in the federal budget. The account basically is a hybrid between the RRSP and the TFSA, and it combines the features of those two programs, and it is designed to help Canadians save for their first home. If you do want to learn more about this program, I will put a link here for a full video describing the FHSA in more detail. As I've reported before on this channel, the British Columbia port workers have been on strike and sort of off strike and then back on strike since Canada Day this year. Well, finally, the latest ratification vote came in at around 75% in favor of accepting the new contract offer. The union had previously rejected the settlement offer twice in the month of July, but this approval sees around 7,400 workers now getting back to normal. It's expected to take weeks, if not months, for the shipping system to get back to normal. A couple of lighthearted stories to end the show today. In what seems to be a very ironic twist, the company Zoom has started ordering its employees to come back to the office. The company says that it is now enforcing what they're calling a structured hybrid approach, saying that employees who live near an office have to come into the office for a certain number of days. In recent months, we've seen companies like Google and Amazon also implement similar policies. All of these companies obviously have been suffering pushback from their employee groups who became accustomed to working from home during the pandemic. They're now reversing that trend. And I just think, a company like Zoom, which basically became famous because of the pandemic, are now reversing what they're even invented for. So it is an interesting and ironic twist. Now, on a second story, generally speaking, when you announce that you're probably going to be going out of business, shares of your company, of course, are going to collapse. But Tupperware, which announced back in April that it was in danger of shutting its doors, has seen its share price skyrocket. In fact, the shares are up around 540% over the past month. Back in 2021, shares of Tupperware were trading in the $40 range, and as recently as a week ago, they were down at 61 cents. As of filming this video today, prices are back up to around $4.70 a share. Now, this appears to me to be one of the latest sort of meme stock phenomena. For a company that has around 40 million shares outstanding, there have been days with more than 100 million shares being traded. In other words, shares are being sold over and over and over by investors who are just looking to make a quick buck. This is just, to me, another example of the state of this very interesting world that we live in today. Announce a bankruptcy, share price spikes. I mean, who would have thought? Coming up later this week, tomorrow, Restaurant Brands International will be releasing earnings. Also, UPS, a somewhat of a bellwether of the U.S. economy, will be releasing their earnings as well. Sun Life and Great-West Life here in Canada will be releasing their earnings tomorrow. And then on Wednesday, Disney and Manulife Financial will be reporting. And Thursday, the U.S. inflation numbers are coming out. So that will be interesting to see where those come in at. And Canadian Tire will also be announcing their earnings on Thursday. I will be back on Wednesday for my midweek update. As always, I do thank you for watching this video here. We do have a link for the Investing Academy in the description below. I'll see you in a couple of days.